Let's talk about one of the most hated institutions today.
GOLDman, I like it. The stock has been up for well over 50 years today, which is back the most asked question in the trading business. Is this still a buy?
I hear that all the time. I try not to ask that myself, but it's hard sometimes.
Beside GOLDman's, we will of course talk about market key levels to watch for next week, along with the impact on August non-farm payroll, so be sure to subscribe and let's get started.
So isn't Goldman a traditional financial stock? Why is it so strong since the beginning of this year? Microsoft went up about 40%, Apple about 18%, Amazon about 8%. Only Google is better at about 68% since the start of 2021.
First thing that came to my mind is definitely the COVID recovery caused the Fed to use QE, which has invigorated the stock market. The bigger the trade volume, the more commissions.
I agree. The equity market has been hot. A lot of companies, bonds, stocks offerings, as well as IPOs. Goldman is a popular underwriter for a lot of IPOs.
And people overestimated the effect of COVID on banks. Goldman and other investment banking institutions should be the benefactor due to COVID.
That's true. And I think a more long-term reason is because of the 2008 subprime mortgage crisis. The financial sector has been heavily corrected. Not only regulators, but also investors are all very stringent on its performance, which means the valuation of banking sector as a whole are largely on the lower end.
And due to the strict regulation, banks are much stronger nowadays. We can see that from the past few Fed stress tests on the banks. So with much better balance sheet and much better risk resistance, the investors are very confident in them. We can see from the past few earnings from Goldman's. Not only did they not get affected by COVID, they thrive from it.
Seems very bullish. So is Goldman still a buy after being strong over almost a year?
I believe so, but it also depends on your investment period. In the long run, Goldman's valuation is still reasonable. It has been undervalued before COVID for about 10 years, so the stock can still soar. Not just that, it also has a lot of catalysts, such as Fed raising interest, the economy cycle, and strong fundamental with healthy growth environment.
And what about in the short term?
In the short term, I think Goldman will definitely hit some upward resistance. First, because the main reason that was pulling the stock up, the IPO or stock underwriting business is very likely to be reduced by later this year. The equity market will not be hot all the time. Also, it is highly possible the long-term interest rate will rise, but this won't necessarily benefit the investment banks like Goldman, but will benefit traditional banks like JP Morgan that will cause Goldman stocks to be way overvalued.
Sounds like you haven't invested in Goldman. You should consider waiting for a financial sector pullback, or if you really want to open financial positions, you can consider JPM or Citi, which the business model are more commercial and traditional.
Yep, financial are natural hedges against high growth stocks. But if you are really a long-term investor, I believe holding Goldman over the holiday will just be fine.
Job creation for August was a huge disappointment. Non-farm payroll growth in August increased by just 235,000 versus expectations of 720,000.
Meanwhile, the employment rate also fell to 5.2%. So how would you interpret these numbers?
Well, first, there was not much reaction from the market after the release on Friday. The S&P 500 closed the day flat. In my opinion, this is a pretty bad report. But this is what the market is hoping to see because this could influence the Fed's decision on tapering its asset purchases. And this will be the last read on employment before the Fed's next policy meeting on September 21st and 22nd.
That is very true. The non-farm payroll is a great indicator to get an insight into the health of the US economy. When we look at the non-farm data, aside from the numerical value, what we really look at is how each industry is performing. Let's take a quick look at the employment change by industry with confidence interval table for August 2021. What I like to point out is that leisure and hospitality employment change in the recent month is zero.
Wow, so if you look at the recent 3 months and 6 months number, Leisure and hospitality is the best performing industry. So what could cause this sudden drop?
Maybe the industry is expecting a slowdown and they are stop hiring, or certainly everyone just stop applying for jobs in this industry and they trade crypto at home. I'm more in favor of case one. So if you have any holding that are in the leisure and hospitality industry, you might want to do some more DD.
Like I was saying earlier, this report is pretty bad. But there is one industry that caught my attention, and that is transportation and warehousing. The employment change in the recent month itself is at 53,000 compared to the last 3 months combined, which is at 131,000.
This makes sense. I mean, more people are doing their shopping online, and this trend is here to stay. All businesses are preparing their inventory for holiday season, and logistics companies are also preparing to serve the surging demands.
Yeah, so for those who think this is an opportunity, you might want to take a look at FedEx. Now might be a good spot to add some position.
I like that thought. And let's take a quick look at this week's market. Were you surprised to see a red market not right before 9/11?
Yeah, all major indices down about 0.7% on Friday's close.
The S&P 500 is down about 1.7% for the weeks, and Friday's close right above the uptrend trend line. Let's see if this an effective support for next week. If not, we're likely to see retest at 4,390.
And the Nasdaq is down a little over 1% for the week, and the drop on Friday is likely fueled by the Apple and Epic Games court ruling.
Well, how likely do you think this ruling will impact Apple's revenue?
Apple does take 30% from in-app purchases from developers, but worst case for Apple is decrease earnings by 4% over the next year. More likely though, the effect could be closer to 1% decrease. So not that much in my opinion.
So this consider a win for Apple? Well, side note, Yellen sent a love letter to Pelosi to urge Congress to raise the debt ceiling.
And Pelosi simply respond, has to happen. If you're wondering what the debt ceiling is, check out the link in description on the video we made a while back.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.